And the Old Mutual story is partly, to a large extent, driven by two things. It's driven by short selling or fear that they need a rights issue, and then that fear feeds on itself. But if you look at Old Mutual, I mean, in essence, if you break it down in its parts, and I haven't updated it with the recent price moves, but Netcore makes up, let's say, R3.50 of Old Mutual, depending on what happens to the Netcore share price. Mutual and Federal is about another, I think, 50 to 60 cents. So Mutual and Federal and Netcore together make up, let's make it R4.10, R4.20 of the Old Mutual price. So if Mutual was to fall to R4.20, you get everything else for free. Now, okay, what is everything else? Everything else consists of the Old Mutual South African business, which is very healthy, and you know, in each organization there are problems, and I mean, maybe the call center doesn't work as well as it should if you speak to clients, but that's not going to affect longevity of Mutual. So SA is good. It's overcapitalized. If you look at the Scandia business, I don't know if you guys went through the results, but the Scandia business is actually doing fairly well, and it's actually getting inflows. So, sorry, did I say the SA business is worth R5 roughly? The Scandia business is worth about another R7. So, and then you've got the US business. Now, the US business consists of the two parts. It's the UAM, the asset manager business that, remember, Mike Levet bought with, what was the accountant then that was fired promptly afterwards? Who bought them? But that business as well, the flows are actually positive. And remember, even that business, it's a suite of funds. So there are money market funds, there are bond funds. So some of those funds are doing well. So you know, so the only part in Old Mutual that is a problem is really the US life business. And in that as well is that old Sage business, which, by the way, is good. The whole business has been transformed, so it's not really, you can't blame Sage anymore. But essentially they wrote products there that guaranteed returns, and the investments they made to make those returns were of poor quality. And in fact, there's a lot of alt A's and CDOs and that type of thing. Now, by the way, ING and Fortis, two of the largest life assurers and insurers in Europe, had massive investments in those same things, and actually needed to be bailed out by the Dutch government and the Belgian government because of those investments. So Old Mutual's investment there in alt A's and CDOs is actually a fairly small part of the total thing. I think that's Daniel to say he's 5 minutes away. All right. Yeah, we're telling stories along about Old Mutual and things like that. So yeah, okay, right, okay. Yeah. Now this is the unofficial part. Okay, we only open when Daniel and Alvin arrive. But so in essence, if you add all those things together and you provide for an 800 million loss needed to plug the hole, then you come to a valuation of about 15 to 17 rand. And Old Mutual was trading at below R5. Now, okay, why? Why is the market so irrational? Because I think that's very important to understand why shares like Barclays, Citigroup, Royal Bank of Scotland all fell so much and so quickly. Because the market's fear was, and there have been rumors going around that Old Mutual actually has got a hole of about 2.5 to 3.5 billion. Okay, now that's you couldn't find that amount in the results, and I still haven't been able to speak to them. I'm seeing them in London next week. But if you put that in terms of a valuation and you make it 800 million potential loss, 3.5 billion pound. Yeah, it's a lot bigger than rands. Then still Mutual is worth about 14, 13 rand. Okay, but now the risk is that if in this market, because the value is there, but you need capital, you need to replace that capital. So if in this market you have to do a rights issue, as soon as a bank or insurer announces it needs a rights issue, or actually any other organization for that matter, what does the market do? If I'm a holder of any bank and I know they're going to have to do a rights issue, I sell because I know they're going to have to price the rights issue substantially below the current price to get investors to take up their rights. So the share price falls. And then as people think there's going to be a rights issue, the share price falls more. Now remember, the lower the share price, the more the number of shares you have to issue to raise the same amount of capital. Does that make sense? So if I need 3.5 billion with an Old Mutual share price of 10 Rand or 5 Rand, I need to raise double the amount of shares, which means the current investors get diluted more and more. And that's the fear that really drove down Barclays, that drove down Bank of America, that drove down all those shares. Because as the share price went down, the guys realized the amount of shares they have to issue now just wipes out everybody else. What didn't help poor Old Mutual is at that same week when it went below 5, then if you saw Aviva, the share price fell 33%, Legal and General fell, Prudential fell, because they all needed rights issues as well, also the market says. So now you've got Old Mutual coming to the market potentially, that's now the market theory, Old Mutual potentially coming to the market at the same time as Aviva and Legal and General. And so if I'm an Old Mutual shareholder, then I say, Rachti, I know if the Brits have to choose between putting more capital into Old Mutual or Aviva or Legal and General Prudential, they maybe choose first Prudential, then etc. So Mutual is going to have to discount its rights issue even more. And that's really what drove the price down. In a normalized world, and once the global economies turn, big question is when, but okay, once they turn, Old Mutual should trade quite back to 10, 12, 13 Rand, and then it's still at a discount. The only risk is, as I say, that the global economy really does turn worse, and it could. There are lots of things. You could have social unrest, which is starting to happen in some countries. You can have a lot of things. You can have the drought in China, which looks like it's almost like the drought in the US in 1930 to 1936. I mean, that could grow worse. You could do lots of things that the whole decimation of the motor industry. So if global events turn even worse, then Old Mutual might need capital, and then the share price goes down further. But for the moment, in our global funds, we started buying Old Mutual because it was just too cheap. Maybe one last point, okay, then on the end of Old Mutual. What's fascinating to me is now when people invest, is as a strategy, do you invest in fallen angels? Is Old Mutual a fallen angel? Fallen angels like Old Mutual, that are on the back foot. I mean, only if you saw the press release, they're selling their Portuguese business and all the little units that they have, and they're closing a lot of Asian operations. Or do you invest in companies like Standard Bank and even Sanlam in that regard? When I speak to Johan van Zyl, he's actually very excited because there are opportunities in India that are actually becoming cheaper. Jaco Marie and so as well. The business they bought in Russia, a year ago when I spoke to Ben Kruger, they were talking to that same business at 5 times the price. Okay, so as an investor, your big thing now is, do you say, I buy Old Mutual because it's so cheap, but you must got to bear in mind it's on the back foot, so it's not going to turn around quickly unless the markets turn, or do you buy companies that are actually now sitting with excess capital on the front foot and going to capitalize on the current environment? And that's, I think, for investors, the big, maybe you do a bit of both.